Hi, this is Rachel Israel with STEM News and Global World Report. We have breaking news that will have a huge impact on the global scene in the very near future. Let's take a look at what's going on around the world.
Tesla's stock plunge, a trade tariff conundrum. Tesla, the electric vehicle pioneer, is facing a stock market crisis. The company's share price has plummeted, wiping out gains made since President Trump's election. This decline comes amidst growing concerns over the impact of the administration's trade tariffs. Investors are particularly worried about declining sales and the increasingly precarious position of CEO Elon Musk. The situation is exacerbated by Musk's controversial role in the Trump administration. His close ties to the president, while initially seen as beneficial, are now raising questions about potential conflicts of interest. This is especially true as Tesla publicly criticizes the administration's trade policies. The tariffs, aimed at protecting American industries, have inadvertently sparked a trade war, with other countries retaliating with tariffs of their own. This tit-for-tat has created uncertainty in the global market, making investors nervous. For Tesla, which relies on a complex global supply chain, the tariffs represent a significant threat. The company is now caught in a difficult position. It needs to navigate the turbulent waters of international trade while simultaneously appeasing an administration that seems increasingly hostile to globalism. How Tesla handles this challenge will have major implications, not just for the company itself, but for the entire electric vehicle market. A cry for help. Tesla's letter to the U.S. Trade Representative. In a strongly worded letter to U.S. Trade Representative Jamieson Greer, Tesla voiced its concerns over the administration's trade policies. Sent on March 11, 2025, the letter highlights the immediate negative impact of the tariffs on the company's operations. The letter argues that the tariffs are harming the very companies they are intended to protect. Specifically, Tesla points to the increased costs of imported components, which are making its vehicles less competitive in the global market. This is despite the company's efforts to source materials domestically. Tesla also expresses worry about retaliatory tariffs imposed by other countries on American-made vehicles. These tariffs, the company argues, are already hurting sales and could lead to job losses in the U.S. auto industry. The letter goes on to criticize the administration's lack of understanding of the complexities of global supply chains. The company warns that tariffs on essential components, such as lithium-ion batteries, could cripple domestic manufacturing efforts. While it is unclear if Elon Musk was directly involved in drafting the letter, its contents clearly demonstrate the growing rift between the White House and one of America's most innovative companies. Musk's balancing act. Tesla CEO navigates Trump's White House. Elon Musk's role in the Trump administration has been a source of both fascination and controversy. Appointed to a position focused on slashing government spending and streamlining the federal workforce, Musk initially embraced the opportunity to influence policy. However, his dual role as a government advisor and CEO of a company directly impacted by those policies has proven increasingly untenable. Despite being photographed with President Trump at the White House as recently as March 11th, Musk has remained silent on the administration's escalating trade war. This silence is deafening, particularly in light of Tesla's public criticism of the tariffs. Some speculate that Musk is trying to work behind the scenes to mitigate the damage to Tesla. Others believe he is prioritizing his government role over his responsibilities to the company and its shareholders. This uncertainty has fueled investor anxiety, contributing to the recent decline in Tesla's stock price. The longer Musk remains silent, the more his credibility, and that of Tesla, is eroded. He is walking a tightrope, attempting to balance his loyalty to the administration with his fiduciary duty to Tesla. The outcome of this balancing act will have far-reaching consequences for both Musk's legacy and the future of electric vehicles. Investor jitters and the future of electric vehicles. The recent turmoil surrounding Tesla has sent shockwaves through the electric vehicle market. Investors, already wary of the company's high valuation and ambitious production goals, are increasingly concerned about the impact of the trade war and Musk's political entanglements. Tesla's stock price, once considered a barometer for the entire electric vehicle industry, is now seen as a reflection of the company's specific challenges. This is bad news for the broader electric vehicle market, which relies on investor confidence to fund research and development, as well as the expansion of charging infrastructure. The trade war, if it continues to escalate, could have a chilling effect on the adoption of electric vehicles. Higher costs for imported components will likely translate into higher prices for consumers, making electric vehicles less attractive compared to gasoline-powered alternatives. Tesla, with its premium brand and loyal customer base, may be better positioned than some of its competitors to weather the storm. However, the company is not immune to the forces of economics and geopolitics. The coming months will be crucial for Tesla and the entire electric vehicle industry. The decisions made in Washington and boardrooms around the world will determine whether electric vehicles fulfill their promise as the future of transportation or become another casualty of the trade war.
Join me as I dive into the chaos of the stock market and see if I can make sense of Tesla's wild plunge after Trump's trade tariffs. Tesla is a pioneer in the electric vehicle industry, disrupting the traditional automotive landscape and captivating investors with its innovative vision. Its stock has been a hot topic in the market, with many enthusiasts riding the waves of its volatility. However, recent trade tariffs imposed by the Trump administration have sent Tesla's stock into a tailspin, leaving many investors wondering what's next for this electric car giant. The trade tariffs have been a significant challenge for Tesla, as they directly impact its import costs and profit margins. The Trump administration's decision to impose tariffs on key components from China, such as batteries and electric motors, has increased Tesla's production costs. This has led to concerns that the company may need to hike prices, which could negatively impact demand and, ultimately, its bottom line. Investor sentiment has taken a hit, with many fearing that the tariffs will erode Tesla's competitiveness in the market. The company's dependence on international trade makes it vulnerable to these protectionist policies, and the uncertainty surrounding the tariffs has made it difficult for investors to gauge the company's future performance. The tariffs have also raised questions about Tesla's ability to meet its ambitious production targets. With the added cost burden, the company may need to reassess its plans and adjust its pricing strategy, which could have a ripple effect on the entire electric vehicle industry. Delving deeper into the specifics of the tariffs, it's clear that they pose a significant threat to Tesla's production costs. The 25% tariff on Chinese imports will add a substantial amount to the company's expenses, which could be devastating for its profit margins. Industry experts have warned that this could lead to a price war, as competitors may try to take advantage of Tesla's weakened position. Expert opinions on the stock's future are divided, with some predicting a rebound once the tariffs are lifted or a trade deal is reached. Others, however, believe that the damage has been done and that Tesla's stock may continue to decline. Markets have been volatile in recent weeks, with Tesla's stock plummeting to new lows. The critical moment came when the company announced its intention to absorb the tariff costs, rather than passing them on to consumers. This move sparked a wave of panic selling, with investors scrambling to get out of the stock. The reaction from analysts has been swift, with many downgrading their forecasts for Tesla's stock performance. The general consensus is that the tariffs will continue to weigh on the company's performance until a resolution is reached. The key moment of Tesla's stock plummet was a stark reminder of the risks involved in investing in the automotive industry. The unpredictability of government policies and the uncertainty surrounding trade agreements can have far-reaching consequences for companies like Tesla. In summary, Tesla's stock decline is a direct result of the trade tariffs imposed by the Trump administration. The uncertainty surrounding these policies has led to a decline in investor sentiment, and the added cost burden has increased concerns about the company's future performance. What do you think about Tesla's stock situation? Do you think the company will be able to recover from the setback, or will the tariffs continue to weigh on its performance? Let me know in the comments below. And if you're interested in learning more about the electric vehicle market trends, be sure to check out my previous video. Thanks for watching.
Well, that's the news for tonight. Thank you so much for continually supporting our content. If you did enjoy this video, hit the thumbs up button, subscribe and turn on the notification bell, and share this with your friends and family. I'm sure they would find it interesting as well. We're very excited to continue this journey with you. We thank you all for bringing certain stories to our attention, and for continually keeping us updated with certain events around the world.